Hello, lovely viewers. Welcome to the first session of Gen 1 Alpha's Business Insights. For this session, I'm going to be your host, and I go by the name Jessica Pepraba. And here with me today are two beautiful and esteemed pundits in the persons of
Nyako HR Deborah, a level 400 international marketing student.
And I am Ado Daniela, also a level 400 international marketing student.
Our topic for discussion in this episode is the risk and benefits of market entry strategies. For the sake of those who have not watched our previous videos, when we talk about market entry strategies, they are the approaches companies adapt when entering new markets, be it a new product development, a new geographical area, or a customer segment. Now, Ms. Nyako, let me start with you. As an international marketing student, what do you think are some of the benefits of market entry strategies?
Sure, Ms. Pepra, thank you for having us. One of the greatest benefits is access to new customers and revenue streams. By entering into new markets, companies can tap into new customer segments and increase their revenue. Another benefit is the opportunity to learn and adapt. Companies can learn from their experiences and apply them into existing business. An example is when Starbucks entered into the Chinese market. They adapted their menu and store designs to suit local tastes and preferences. And also they partnered with local businesses to establish a strong brand presence.
That was really insightful. You spoke about the overall benefits of market entry strategies, but then we have different market entry strategies and each of them have their risks and benefits involved. For instance, when you take licensing has the benefits that allows licensors to invest in markets to extend their brands without making huge investments. Also, when we look at franchising, it allows for new market entry growth as most of these franchisees are already familiar with the market. Also, looking at exporting allows investors to test the waters without making huge commitments. Ms. Ado, let me come to you. What's your take on the benefits of wholly owned subsidiaries?
Okay, thank you very much, Ms. Pepra. There are a lot of benefits of wholly owned subsidiary, but one benefit I would like to talk about is the complete control. And with this benefit, the parent companies has full authority over the subsidiary's operation and decision making. This ensures that the subsidiary aligns with the parent company's strategic operations and decisions. For example, Toyota, as we all know Toyota, they operate wholly owned subsidiaries in different countries such as Toyota Motor Manufacturing Canada. This allows Toyota to maintain its complete control over production quality and operation whilst adapting to local market needs. Then another benefit too is the market penetration. With this aspect, the wholly owned subsidiary allows companies to enter foreign or new markets independent without relying on any local partners, giving it the flexibility to adapt to local market conditions.
Wow, really interesting perspective over there. Now that we have looked at some of the benefits of market entry strategies, let's flip to the other side of the coin and talk about the risk involved. Now, Daniela, let me start with you. What do you think are some of the risks involved in exporting?
Okay, as my colleague has already talked about the benefits of exporting. Exporting also has a lot of risks, and these risks are trade barriers and foreign competition. Under trade barriers, a sudden imposition of tariffs makes it difficult to export to certain markets. Trade barriers can change due to international relations or shifts in trade policy. Then the next risk is foreign competition. Under businesses in the target market may have a better understanding of local preference, lower production costs, or great brand loyalty, which makes it harder for foreign exporters to compete.
Beautiful one day. Now, Ms. Nyako, let me come to you. What do you think are some of the risks involved in franchising?
So initially, franchisees may be resistant to paying royalty fees, which can reduce revenue to franchises. Another risk involved in franchising is cultural and language barriers, where franchises may struggle to adapt their business model to local markets, which can lead to misunderstandings and miscommunications.
Wow, really insightful. In your statement, you made mention of a franchisor and a franchisee. So can you please tell us the difference?
Sure. A franchisor is a business or individual that owns the overall rights and trademarks of a brand. A franchisor is a business or individual that owns the overall rights and trademarks of a brand and grants. Sorry, let me take it again. A franchisor is a business or individual that owns the overall rights and trademarks of a brand and grants the right to operate a franchise to independent business owners. And these business owners are known as the franchisees. So I hope this will help our viewers to understand the difference between franchises and franchisees.
I hope so too. Okay, so can any of you tell me the risk involved in licensing?
One risk involved in licensing is loss of intellectual property, where licensors may lose control over their intellectual property, such as patents, trademarks, and copyrights. And also, when licensees engage in unethical and illegal practices, it can lead to damage of brand reputation.
Excellent. And when it comes to wholly owned subsidiaries also have the risk of regulatory compliances, which may be time consuming and costly. Also, management and control of these subsidiaries from a distance may cause inefficiencies and inconsistencies. Okay, so this is where we draw the curtains to this session of the podcast. Please, any final words?
Thank you very much for having us. We are much grateful.
This has been an interesting and educative conversation. I hope our viewers have learned a lot from this.
I hope so too. So guys, stay tuned for the final episode of J1 Alpha's Business Insights. So this is where we draw the curtains. Don't forget to like,
share,
comment,
and subscribe. Till we come your way again. Bye.